The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome. Another gorgeous and beautiful March 13th at the headquarters of Technical Trading and Investing, TFNN.com. We've got just a gorgeous day here in the headquarters of Clearwater, Florida, the National Clear headquarters. And let's see. Get going on here in just a second. Got a few things to clean up on and get started here, and we'll be ready to go. But what we do is kind of remember, let's see if I can get a few things cleaned up on my computer here. Everything wants to just mess up right at the open here. And I'll figure it out here in a minute. This day in 1969, Herbie the Love Bug opened. Kind of an interesting day. I kind of vaguely remember it because I think it was one of the first movies I kind of vaguely remember seeing as a child, and kind of interesting. But it was one of those movies, kind of sweet, but at the same time, how can you say it? It was fun. It was just wasn't mean, and always had the same old despicable band of Walt Disney character actors being the heavies, and it's just one of those things where it's kind of interesting. So what do we have going on in the news? Basically, what everybody thinks is pretty much always going on. We've got the Titans of Wall Street continuing to fight over HLF. We've got Ackerman on one side, Icon on the other. And, what are they doing? They're doing the same kind of stuff that Titans always do. This time, the round goes to Ackerman. He got a consumer group to basically call Herbalife a Ponzi scheme. And it was kind of down a little bit more earlier in the day. I don't think, in fact, I'll take a quick look at it here. HLF. It's off almost 2% today, $39.60. And the question is, who will prevail? Kind of funny that Herbalife, the company, is coming out and really trying to insult Ackerman and his hedge fund. Normally you at least start dispelling some of the rumors that he's putting out about your company, but I think you've got a hard problem when 80% of your so-called distributors buy the product only for themselves, thinking that they're getting a slightly better deal. And, of course, like all power law run companies, only the last few percent actually ever make any significant money out of it. Basically, even Herbalife's records show it. I think over time, probably going to figure out that Herbalife has an issue. Whether or not the SEC will pick up the gauntlet and decide these multi-level marketing schemes are Ponzi schemes. But anybody that has a spreadsheet will know the only way that the things can work is if the last 5, 3, or maybe even 2% of the people actually make all the money, and the other 90%, probably 10% underneath that break even, the last 80% lose in one of these. We had some big numbers out today, and when we look at those numbers, market kind of opened up a little bit soft today. And that was even with very good retail numbers until everybody started digging into those retail numbers and finding out, everything, retail purchases are up 1% or 1.1%. They found out that 95% of that was because of gas going up, and just about every other category for retail spending was down. We are slightly up 3.5 points on the S&P cash. Again, extremely light volume in both up and down markets, at least the last few days. Just 2 billion shares so far in the consolidated New York Stock Exchange tape. and we continue to think, maybe it will be problematic to think that that won't eventually filter down. But initially what everybody thought was great numbers came out to be all in one category, and that was gasoline. And you really look at when you drill down into the numbers, you find out that if you're making less than $100,000, then you probably spent less money on other things and actually spent more money on gas last month. When you get in and above $100,000 household incomes, you probably didn't cut back your spending as much. At $250,000, you didn't cut back your spending at all. But less than $100,000, that gas price going up was a direct result in spending less at bars and restaurants, and just about every other facet of spending for the consumer in the United States. We also saw retail sales numbers and housing starts come out. In the housing start issue, we've been talking about this market starting to cool off, and interest rates have gone up and ticked up a little bit in the last week, 10 days, and we saw a direct impact on the housing starts because of those higher rates. We'll look at some of those housing stocks later in the show today, but it continues to be one of those markets that I think is awful frothy, and even with the S&P up slightly, we continue to see a problem in looking at those. I have been looking at the options and spending a lot of work on them. I went flat on Monday. I suspect that we are probably going to have a very flat market all week. We're probably maybe see 1565 as a high this week, and maybe 1545 as a low, and options are basically pointing to an expiration right around that 1550 level. So not expecting a lot of volatility before the end of the week, and maybe into next Tuesday into rollover. At that point, we might start seeing a lot of difference in the way that these stocks are moving. Trying to see if there was anything else going on. The dollar movement has basically put a cap. Let's see if I can find it in play. There we go. Okay. Crude's below $92 a barrel. I guess that was a little while ago. Let me get a update out here. What did we have up here? 92.61. It's about 9 cents. The dollar index is up 28 cents today, 82.88. And pretty much probably headed to the mid-84s on the dollar index. But it is a war to the bottom, and every time we start pushing up a little bit, the other countries start pushing down. What can you say? Other things out there, natural gas up 4 cents today, $3.69, getting to the very end of when this probably will have at least seasonal strength, unless we see other things come in. When we look at gold, it's off $3. Excuse me. Yeah, look at gold. It's off almost $4. 1584. 1587. Excuse me. 90. I need to get some glasses. Oh, I've got some right here. Anyway, we look at that in a market that's not truly moving that much. I suspect we saw and are looking at a market that that is going to remain flat, maybe into mid next week. A lot of stinky IPOs are being pushed out. Normally happens at the very end of a big run. We saw Silver Lake Partners come out today. It priced in the mid part of the range, and it is one of the few tech IPOs out. I'm not hot on it. I think it's probably, like most of these IPOs, going to pull back significantly before you want to do anything with it. But we've got about 6 more that have priced on Monday to roll out next week. A lot of these are larger, and I suspect if anything is known about the street, is they make a lot of money on mergers, and they make a lot of money rolling these IPOs out, whether they're successful or not. and I suspect that they could keep this market up, even if it doesn't go much higher or much lower. I think they're looking for low volatility to push these last miserable 6 out next week, and I think that's why you might see this market hold up through that part of next week. Fund managers that work for these big outfits, I'm pretty sure are told to save some of their spending for any weakness in the market to make sure it stays nice and flat, and they get these IPOs out. No reason to scare anybody when they're getting so close to the goal line. And market manipulation has always existed. Always recommend people reading Reminiscence of a Stock Operator and understanding what operators are doing out there. It is a new, there's nothing new under the sun, and market manipulation is not new. And these big people of the street have control of a lot of money. They control their own stock, which is why I've never liked shorting Goldman Sachs or J.P. Morgan. They come out with all kinds of manner of stories and upgrades as soon as it looks like they're weak at all. They more than defend their stock. And sometimes they defend other stocks of other companies, but no more viciously than they actually support their own. So when we look back out here, I wanted to go back and just see if we are seeing any kind of significant movement in the markets, and I really don't see much yet. Like I said, probably looking at some kind of drop in this level of volatility through the end of the week, and we'll get into some charts in the next segment. You can give me a call at 877-927-6648. That's 877-927-6648. Be glad to take your phone call, and maybe on a broader issue when the market's kind of quiet here today. But we'll be looking at some other stocks. Wanted to get into Boeing and its huge move. Wanted to also, we're going to, in the next segment, talk a little bit about Netflix and what can we do about that. But right now, seeing a lot of these housing stocks look a little bit weaker. We're going to get into the charts of those today. And, you know, gold continues to try to push higher. And just doesn't have any juice to it right now. UNG, of course, the natural gas, trying to get a little higher, up about 1.5% at 2030 as we do the show. But you know, we're looking at some of these other stocks that are pushing up on fairly light volume. I'm looking at Amazon, Expedia, IBM's up about 0.7% today, and looking for the kind of volume that would signal a breakout on that, not getting it. Apple's been pushing up to that 435 several times, closed above it the other day, giving an actual buy signal. We're pushing up on about 10 million shares today, so 435 really looks like the battleground. 425 looks like the low spot on Apple. We'll talk a little bit more about that today also. Anyway, why don't you hang on, and we'll be back in just a few minutes.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And we are back and having a great time here at the headquarters of Technical Trading and Investing. And let everybody know what's going on out here. We've been watching some of these home builders out here and how they were reacting to the news. Let's go to a little shorter time frame out here. We have broken above it with a doji. We did, at least in the XHB. So we've been watching how this market has been pulling back. It had a little pressure on it this morning, but again, the market continues to move up just a little bit on very light volume. But we are just hanging out here at these highs again another day with light volume. But that is the XHB is the S&P Home Builders Index. And, well, just so I can tell you actually what's in it. Let's go to the profile here and look at holdings. No. Okay, top 10 holdings are Tempur-Pedic International, Mohawk Industries, Carpet Company, Standard Pacific Corporation, SPF, we've been talking about that stock for a while, Lumber Liquidators, Masco Corporation, D.H. Horton, Fortune Brands, A.O. Smith, of course, maker of water heaters, Lennox International, the air conditioner makers, and Leggett & Platt, LEG. So maybe we should go through a few of those. I think we've seen TPX probably a little bit of problems with some of these. Tempur-Pedic did break out above its previous high, 4 days ago now? 5 days ago? Did so on strong volume, but not enough. Basically, you had, you basically, what can you say? Yeah, we were going against the January 25th high, $43.45 that had 11 million shares, and basically broke above it with 7 million shares, and have been going sideways ever since. MHK. I guess the idea of this particular index is also that it is around all the peripheral things that people buy when they buy new homes. Mohawk Carping, of course, a hugely owned, basically almost totally owned by Buffett now, but still a public company. This one broke above, but has not had any kind of significant volume over the February 19th high. And let's look at this one just a little bit longer in 2 years. I mean, this one had a lot of points where this thing looked fairly weak, around the $60 area. Really is broken higher and higher as Buffett buys more and more of it, and there's a less and less float. I'm not exactly sure the financials have caught up with this thing, but this is one of these things that looks like it could break, and break hard on it. Lumber Liquidators. Let's take a good look at that real quick. This one kind of following the same kind of pattern. You had 1.6 million shares on February 20th at the high, and what do we have out here? 900,000, 500,000, 700,000, 300,000. Just 700,000. We haven't had few dojis out here. In fact, if we close here today, we're going to have 2 lighter dojis out here for for Lumber Liquidators. D.H. Horton, DHI. Let's look at that one real quick. Let's get, you had a higher high out here. And so this thing hasn't broken its previous high yet, which is the February 12th high at $24.66. DHI is the symbol on this one. So we're looking for 10 million shares. If it could get to $24.66, this one's kind of moving up today on very light volume. But you only have, 40, 50 cents for this thing to prove itself. Probably going to see that in the next day or so. I could see, especially if this has got any kind of decent amount of options on it, would probably like to close on Friday around 25 bucks. But I'll look at those options during the break. Other things that probably look, AOS is A.O. Smith Corporation. Of course, they make water heaters. He had about 410,000 shares on February 20th when most of these stocks broke above. You did break above it with higher volume, 470,000 shares, not a rousing endorsement at that previous high. And then you've had 1, 2, 3, 4, 5 days that you could almost consider dojis. So very interesting movement in this thing. Sell signal would be a close below 72.72 and might give you a good idea of where this index is going. We'll be back in a minute. In the meantime, pick up that phone, dial 877-927-6648, and give me a call. That's 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to look at some other stocks. Probably not too many really moving out there that we know of. Probably the most interesting to me was Dole Food Company, DOLE, and citing higher banana prices. Yeah, I see bananas everywhere when I go to the store. I don't really think too much about how much money's in them. But there's one thing that you do, and that's wait for tests of high volume lows. And you had a monstrous high volume low in Dole on the 2nd of January with 10.6 million shares. It kind of went below that. It's really hasn't tested that, but probably looking for a test around that $9.55 low. 2 days before that low on January 4th, you had that huge move down. And it's not uncommon to see stocks kind of consolidate back in these areas. But this one never jumped above that previous volume. And kind of maybe looking at what I'm thinking is happening in a lot of these stocks. We may even see higher highs. And then on the right-hand side of the chart, they're going to continue seeing these things move lower. Some of the stocks that I'm watching are Weight Watchers. This thing may be bottoming. And when you look at this one, it's kind of interesting out here with lighter volume, so we want to be keeping an eye on this one. It may need some time to consolidate. Was down, interestingly enough, on lighter volume, but I'm looking at the last major low out here, August 2nd, $40.60. and that was August 2nd of 2012 out there. 3.1 million shares. As we've gotten back into that price range in candle, all under a million shares back here. So, and even light today out here. So I think some of these stocks that are out of favor now may be the next ones up in rotation or a flight to safety. But Weight Watchers always kind of runs normally right around the first of the year, and then tends to sell off fairly quickly. I think there's a little bit more to Weight Watchers than that, but keeping an eye on it. Another one is Westlake Chemicals. We got to take a little closer look at this one. But what we have on this one is the January 31st high at 900,000 shares. Very light volume, about 380,000 shares yesterday, and fairly light today. Not a huge pullback, but again, as long as the market continues to work higher, we will continue to probably see a lot of these stocks that probably in any normal market would start pulling back, at least go sideways for a while. Just wanted to look and say, 1555 on the S&P cash, closing in on 2.2 billion shares. So looking at another day of probably 3.5 billion shares. So fairly light volume. Again, up at these highs. Looking to think anything else out here that's worth looking at. But we're going to look at continue to look at these trying to break out highs. Wisdom Tree Investments, WETF. This one's pushing highs up here, but on a lighter volume also. One of the most interesting things in the news out the last few days is a lot of these funds that only go after accredited investors have moved their minimum investment down, some of them from $5 million all the way down to $50,000. Trying to bring in as much money at the top as possible. But kind of interesting how a lot of these funds are now actually fighting for money and fighting for less wealthy donors. And some people believe that a lot of these these other kind of investments are actually being drawn by people with a little less money chasing at the end of this market. What we have is that 1.6 million share high on February 8th in Wisdom Tree, and 1.1 million on March 11th. Not a whole lot out here in the way of that kind of volume again. You had kind of a nice spike with the stock. It really didn't do anything, about 3.5 million shares on a doji day. It's been drifting up here on lighter volume since then. Western Digital, a lot of these companies people are very interested in. WDC looks like it's finally retesting its previous high. We were looking for some kind of volume for today. My guess is this thing is probably moving up on options and looking probably to close at $50 on Friday. But the January 28th high out here, $49.50, 4.5 million shares. Tried to get in on it on February 15th with 2.1 million shares. And what are we getting? Yesterday you had about 4 million shares. So you got close, down about 500,000 shares. But we are breaking that today, and be very interesting to see whether any kind of volume comes back in. Again, you can give me a call at 877-927-6648. That's 877-927-6648. We'd be glad to have your phone call today on a kind of a quiet day. Almost all the action's happening in the last 30 minutes these days, and not a lot of blow-by-blow at 2 to 3 o'clock, but we'll keep an eye on it. SAP, of course, a competitor to kind of IBM, Oracle, a lot of those other big companies selling database and information services. It is back up at its highs. The one major one I'm looking at is the January 10th high, where you had 3 million shares, tried to go above it with half the volume, busted right back down into the trading range, and closed in on its previous low. The February 1st high, 1.5 million shares. 1.2 million shares as you broke above it on March 7th, and been kind of going sideways since. Again, without a market pulling back, very tough to get people to sell in these markets, whether or not the stocks break out or not. Ryder Systems, another one up here on very, very light volume. Of course, not a hugely huge volume on any particular day, but even now breaking its previous highs. When we look at Rider System symbol R, the February 6 high had 460,000 shares. We've looked the last few days, and you're basically getting in 350,000 or so, 360, 370,000 shares. Probably going to come in about 320,000 shares today, so we'll be looking at those. International game technology, been a hot sector. I've been waiting for it to test its March 27th high, and it, 38, came a penny ahead yesterday. Again, $17.37 on that March 27th of 2012 high. 5.6 million shares. Just haven't had a lot the last few days. 3.3 million shares on Friday. Yesterday, 3.4 million shares. Look like it's going to be dramatically lighter today. Hog, the old Harley boys. And, of course, it is the big week in Daytona. If you've never been down here in the spring, it is called Bike Week, and 400,000 or 500,000 bikers descend on Daytona. I've gone a few times out there. Mostly I just go up for the races at the track when I was racing, but I've gone a few times down the street, and you might as well park your bike because there's just too many people to actually go anywhere at all. Just walk your bike around downtown. Anyway, Harley-Davidson up here at these highs. We've been seeing a lot of subprime loans coming back to the car and automobile and motorcycle industry. This has put the last bit of juice in this stock. What we see is the last major high at 54.62, 3.5 million shares on January 29th. We've had about 4 days of it staying in that range. And 1.5 million shares, 1 million shares, 780,000 shares, 700,000 shares. Probably going to do 750 today, maybe 800,000 shares. Not a lot of these stocks doing higher volume. Even if you use the May 1st high out here that had 2.8 million shares, still not seeing the kind of strength that you would like to see back in here to hold these highs. But as long as the market goes higher, we're probably going to see these also drift higher. Ethan Allen Interiors, another one of these in the housing sector where people are buying new furniture to fill their brand new houses. We've been watching this one attack its previous high, $30.29 of November 1st last year. You had 580,000 shares. So as we look at the last few days out here, as we attack that particular high, what do we have? 430,000 shares, 490,000 shares, and probably going to come in with 400,000 shares today. So we'll be light attacking those highs. And let's see, what else do we have out here? Darden Restaurants. We talked a little bit earlier in the show about retail sales being down on everything but gasoline being such a huge part of what we buy was actually a bigger move out here. This one is coming back into the huge gap it had down. Not a lot of people still buying, I guess, the Red Lobster steak and surf and turf out there. It came blistering down on the 4th of December. It is back into that range. When it came down on 10.5 million shares. We're coming back into it and easing back into it. 1.7 million shares so far today. Probably has another 50 cents in it to go. We may even see on a short squeeze this thing make it to 50. At that point, you'd want to be looking at this one for a retest of its lows. One of the things I dislike about this is that it did have a high volume low that is untested. That's that February 25th low out here where you actually had almost 4 million shares. Blew out the previous high volume low and suggests that 44.11 will be retested in the next 6 months. Chevron Corporation, of course, the big oil conglomerate. CVX up testing its highs. It is still 20 cents short of testing its basic September 21st high of 118.53. Had 10 million shares up there. We've been coming into this high on about half that, a little under 5 million shares, all these last 5 or 6 days. But not, as long as we can't get the market to pull back, it's going to be hard to get any of these to crack. Coinstar, another one of these that came down on monstrous volume. It's back up into its gap. Came thundering down like a herd of animals with about 10 million shares on, June 27th of last year. and it's been working its way all the way back up. It's taken this long to come back and fill the gap. Unfortunately, the volume the last few days has been a million shares, 1.3 million shares, probably going to come in with about 1.1 million shares today. So we would probably want to be looking at Coinstar. The big problem with them continues to be they are a DVD player. They've been pushing into online streaming, and in fact, we've talked about looking at Netflix. We'll look at it next. But Coinstar going up against them, I actually joined Coinstar's Redbox streaming delivery. The content was horrible. There was nothing actually I wanted to watch. I watched a few Australian movies, but almost everything was bad. I don't think you can start with bad and do very much. And Coinstar, basically what they had to watch just wasn't worth watching, at least in my opinion. Do I still rent some of their DVDs, especially Blu-rays from the little Redbox players? Yes, but I don't think that's enough anymore. Especially the streamers are probably going to have their own problems, but very interesting to watch. This thing does have a high volume low that is untested at $40.50. That would be your target if you're thinking about going downtown on it. Netflix, NFLX. This is the short squeeze of one of all times. When this thing does get finished with consolidation, I suspect that we're going to have a short of all time. It could easily get back into that $95 range. But what you have is one of the best operators of all time, and that's Icon. He's found a stock that had enormous short interest, bought into it, and is working with the CEO to keep the stock price high. They are basically a lot of self-serving press releases again today, goofy press releases that's making this thing pop up here today. Nothing I think that would actually change the long-term outlook in it, but when you've got a lot of people short, that's it. What you want to watch is when no one cares to short this one anymore. And this thing's probably going to first gap down to about $140. But until you see Icon done with his distribution of this stock, that's going to be it. And it may take him 3-6 months to get out of this. But Netflix basically been going up without them actually telling any kind of numbers short of House of Cards is going to cost them. They're paying $4.5 million per episode to do it. But the real thing is they've got that Disney agreement, and no one knows how much they signed up to pay Disney. I would suspect that why that's so far out in the future, it probably does not matter. Most of these deals are probably written like this for a purpose. That is to get out the CEO and Icon out at these lofty levels. Just not too long ago, this was a $50 stock. Nothing dramatically changed. The numbers are getting a little bit better. But this stock is so far ahead of itself that you want to short it now. Just remember that you're looking for the stock to finally have a zero volume and probably a retest on zero volume or even less volume. And you're probably going to see that no one's more is interested in buying Icon's positions out that he got in that $50 level. Anyway, we'll be back in a minute. Give me a call, 877-927-6648. That's 877-927-6648. Looking for your call.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Wanted to get to IBM here before the show's over. This is one that we all probably want to be watching. We need about 4 million shares from the April 3rd, 2012 high at here, 210.69. Of course, we've gone above that, and dramatically today. Volume is not picking up. Yesterday we had almost 3.6 million shares. So again, we're seeing a lot of these stocks break higher highs, still no volume, and these are some fairly long patterns out here if you like playing these longer style patterns. So I think we are continuing to see the kind of weakness, maybe even some rotation in these stocks. IBM. Boeing was the other one I wanted to look at. We talked about, of course, I never was much on shorting this. I think we had somebody calling in and wanting short. I thought about 73 would have been the low. Pretty accurate on that. And what do we have? Just basically your old short squeeze rally out here. So many people were putting bearish bets on Boeing, and of course now the pretty good chance that FAA is going to approve their new battery plan. All those people have to come out, and of course this is one like a lot of the other Dow stocks out there, heavily owned. People are not going to sell it. Doesn't matter what happens in the economy. If you were looking for one that was fairly safe, this is it, and continues to be problematic out here. What else do I want to look at before the end of the day out here? What was it? Shineri Partners. Of course, this company, the CEO is leaving. A lot of bad stuff, bad juju in this. It hasn't come back and really started to fill its gap. That gap started on September 20th of last year. It came down with 6.5 million shares that day. CQP is that finally getting back into that range and on fairly weak volume. Certainly nothing compared to that 6.5 million share day down day now. We are looking at the last few days of volume out here. 244,263, and probably going to come in with that today, but very light volume as we come back in there. In the news, we do have apparently a new pope, and two things kind of strike me about that, not being Catholic. One is that if they can't come up with a pope after a couple of days, they shove bread and water in, and they have to eat bread and water until they pick a pope. I almost think that there's some kind of wisdom in that would work. And what if we could just shove Congress in and, if they didn't solve our problems in a couple of days, feed them bread and water until they did come to a solution. Maybe some of these guys would actually feel like doing what we pay them for. The other thing that I remember is being in Los Angeles, and it had to be early 80s, mid 80s, something like that, and apparently the Pope was coming, and every once in a while you think you've seen it all. And probably the thing I remember the most was that they were selling all kinds of stuff. Pope on a rope, just every kind of trinket you would think. But the one that hit me the most was a lawn sprinkler with the Pope with his hand out, and his hand, water came out each finger. And the name of the product was the one that killed me the most. It was lettuce spray, a lawn sprinkler made out of the Pope. Well, it can't ever hurt ingenuity and the American spirit that wants to make a buck. I'm just wondering how many people actually bought something called lettuce spray, a lawn sprinkler with the Pope. Maybe if you're a big Catholic, maybe you'd buy something like that. Kind of hard for me to think about, but interesting nonetheless. Anyway, we've got kind of a quiet day out here. Make sure and give me a call tomorrow. Always available here, 2 to 3 Eastern Time, each Bat Day. Of course, Bat Channel 14 on Tiger TV. You can always catch the replay and all the charts we looked at here today. You all have a safe and wonderful evening. See you tomorrow.